Greetings, members, one and all of the Salivation Nation. Silver stalls compared to gold. Does it still have a chance? Let's explore! Gold and silver have taken a bit of a hit today. As of the recording of this video, they are down. But silver is down much more, down over a percentage point, whereas gold is down just about 0.15%. And whenever gold was up over $1,900, the percentage increase was not the same for gold and silver. In fact, silver did not perform as well as gold, even though it went above $28 an ounce. But the ratio between gold and silver has widened again to 68.52 as of the recording of this video. So that makes us wonder, what is happening with silver? It's stalling, and it is moving backwards in terms of the ratio, where typically, given the volatility of silver, it has a tendency to, in usual circumstances, to outperform gold on its way up. And, of course, on its way down, it underperforms gold. It takes a bigger hit. So we're not seeing that occur here. So we're wondering if it has a chance to catch up to gold, and will it hit the targets that I have predicted earlier in the year of $30 to $35 an ounce. It is a metal to watch here, and we are going to pay attention to it as we move through. And I think one way to gauge that measure is through the gold to silver ratio. There's an article on Kiko that talks about this, and it still says that the silver is the metal to watch as gold is pushing to $1,900. Of course, it's below that right now, but it is something that if it hits $1,900 again and keeps climbing, especially with the next resistance around 1930, that eventually silver will catch up. In a report published on Tuesday, analysts at Metals Focus said they expect silver prices to continue to outperform gold through 2021. And these comments come as the gold market has enjoyed a two-month rally as investors look for a hedge against the growing inflation threat in a low-interest rate environment. The shifting dynamic in the precious metal space has pushed the gold to silver ratio to around 70 points. In fact, it's 68 now. The UK-based research firm Metals Focus noted that silver prices have lagged in recent weeks as copper prices have fallen from their record highs above $10,000 per ton. However, the analyst added that silver continues to enjoy the best of both worlds as both industrial demand and investment demand remain strong. In fact, as of the recording of this video, we are starting to see yet another multi-day silver raid from the Wall Street silver community as a reaction to some of the testimony that is on Capitol Hill from some of the big banking executives. We'll see how that plays out, but make no mistake, the silver squeeze is putting a lot of pressure on the retail market, and this is what is partially causing some of these high premiums. So we will probably continue to see high premiums on silver no matter what the spot price does. It's in a sense really a separate market if you really taken that into account. I believe silver spot price is an important gauge, but when you take into account the premiums that are being paid for the silver that you sell back to your bullion dealer, I think that gives us the confidence that we are seeing a market that is separated from the commodities prices out there in the physical world here. So we have the usual concerns that we're talking about these days: ongoing fiscal monetary stimulus, new variants of the virus, and what is happening with economic growth and the demand we might see on the precious metal in terms of utilization for solar panels, a variant of the Green New Deal, EVs, all kinds of things that are going to test the demand for industrial silver. Analysts noted that investment demand remains robust, and we know this for sure. Global holding in silver-backed exchange-traded products remains close to record levels, the analyst said. And you think about that, ETFs, exchange-traded products too, how it has increased. And these markets typically aren't tested except for maybe PSLV, but the SLV is not tested. And but nonetheless, to see that as well as physical bullion demand reached record levels in the first quarter of this year, rising 43% compared to last year. Silver's industrial market, the analyst said, that the precious metal would continue to benefit from the growing momentum in the development of green energy technology. Metals Focus expects gold price to strengthen over the course of this year. Against this backdrop, given the smaller size of the silver market, silver should outperform to the upside. So therefore, they expect the gold to silver ratio to ease back into the low 60s during the second half of 2021. And I think that's a pretty safe bet. I think I very well could see that be happening, as right now it's in the high 60s. If we see it go down to 63 or 62, I would not be surprised to see that occur, which is not a radical shift, by the way, just so you know. But that could essentially mean that silver could propel its way back into the 30s range or the high $28, $29 range, especially if gold tests that 1930 level, $1,930. It'd be very interesting to see how that all plays out. It is fascinating market to watch, and you have to keep in mind that there is that separation in a sense from the physical bullion market to the spot price, and even though spot price is extremely important, that's the foundation from which the premiums are derived. It is a market that is evolving and shifting in terms of those premiums from the time that you sell those metals to the time that you buy them, and the spread between them, and inflation that is also injecting itself in those premiums all the way up to the point of sale. That's something to take into account and take seriously as well as we measure now against what we had been used to in the past pre-pandemic for silver premiums. It is something that we'll have to watch here and see if silver does have a chance. I do believe it does. But as of right now, it is stalled. At least it is stalled according to the price, spot price movement here. And the metals are down today. Gold not by a whole lot, but silver down by 32 cents as of the recording of this video. So we'll see how it plays out. Silver is a metal that frustrates many of us, for a myriad of different reasons. A lot of us feel like it should be higher than where it is. And that's something we felt for quite a long time. There's others of us that feel like, it is higher and the premiums frustrate us. And so we're concerned and curious as to why that is happening on a grand scale for such a long period of time. But I think we covered most of the reason for that in terms of the demand for the physical products out there is driving these prices up. And I think that'll continue to be the case as we see the squeeze in the retail market for bullion products out there. So what does that mean? Well, you have to gauge for yourself about timing for buying gold and silver, especially silver's high premiums. Can you swallow these premiums? Can you recover those premiums? In some cases, yes. But the gap is wider than ever before, I believe, between the buy and sell prices for silver products out there. But does it have a chance? I think it does. In a way, it already is performing better in terms of being sold, and the premiums that are tied to silver are much higher than gold. So there you have it. Fascinating indeed. And see where we're going with silver. It is a metal to watch, and we will continue to keep an eye on it throughout the year. Let me know your thoughts in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.